Hello and welcome. You're watching Property Hotline with me, Kavita Krishnan. Now, choosing that dream home is just one part of the home buying process. Financing it is an extremely important step, and most of the time, people like you and me are quite unsure about how to go about the whole process. Also, what is critical is that you can land a good deal even in the home loan market. Yes, if in case you didn't know this, banks and home finance companies are competing for your home loan account, for your custom, and there is a good way that you can actually go out there and get a great deal on a home loan. If you want to know more, you've tuned into the right show. Today we'll be answering all your queries related to home finance with our special guest Harsh Roongta. Harsh is a Sebi registered investment advisor. He's also a personal finance expert. Harsh, welcome to the show.
It's a real pleasure.
Let's take our first question, Harsh. Varun has written in via email. Now, Varun says that most home loan discussions revolve around loan amount and rate of interest. He wants to know what is the optimal tenure for a loan. He took a loan with a tenure of 360 months, after which there were rate cuts, and after 12 months of payment, it now stands at 296 months. He wants to know if that is still too long. It's a very interesting question over there. And also what I've seen, Harsh, is that, banks probably to keep your EMI constant and ensure that there are no defaults. What banks tend to do is that, when the RBI was increasing the repo rate, what they did was instead of increasing the interest rate on your home loan, they tended to increase your tenure. And unless and until you were that kind of a customer who actually went through the home loan statement every month, you really didn't have any clue about how long your tenure has, how much your tenure has increased. Most of us were just happy thinking that, oh, my EMI has not been affected.
So Kavita, just to let you in on a little secret of the home loan industry, there isn't a monthly home loan statement. You really don't get a home loan statement monthly. In fact, there are quite a few lenders who will never send you a statement.
But you can go to the bank, you can go to the website and actually check how much of your tenure is still left, right?
Oh, absolutely. I think most banks are now available online. All that I'm saying is there is no proactive sending out of a statement. That was in the lighter vein. I think he's raised some very valid queries that people talk about the rates, interest rates and the home loan amounts, but what tenure should you take? I think typically the first thing is what tenure can you get? I think so. If you are very young, all banks give you a tenure such that at the end of the tenure, you are still at or before your retirement age. So max tenures in India are 30 years, although more standard is 20. So if you are 30 years old, then you have a chance of getting a 30-year tenure. If you are 35 years old, because you will tend to retire at 60, you will get a 25-year tenure and so on. So this is in respect of what you can possibly get. If I was to answer what tenure should you take, I think the key to remember is what is affected by the tenure. Two things can be affected, the loan amount and the interest rates. Effectively in India today, interest rates have common. Whether you take a 5-year loan, 10-year loan, 20-year loan, interest rates are more or less the same. I have not really seen any serious interest rate difference. So what it changes actually is the home loan amount. Now you will understand that if your tenure is 30 years, your EMI is lower per lakh of a loan. If it is 25 years, it will be slightly higher. If it is 20 years, slightly higher, and so on. Now, when banks give you a sanction, they typically take into account that a certain percentage of your income is eligible, is available for repayment of a loan. Now, if the EMI is higher, your eligibility
So
will be
essentially,
lower.
Harsh, what you're also saying is that customers need to be more proactive when it comes to managing their home loans. So say I've moved jobs and my salary is suddenly, for instance, jumped 30% or 40%, which does happen when you switch jobs. So if that is the case, then I should probably look at, would you suggest that I call my bank and say that I would like to increase the amount of EMI that I'm paying or increase the principal outgo and thus reduce the tenure?
Yeah, absolutely. I was about to say that even if initially you have to take a longer tenure because you require a higher loan eligibility, most home loans are floating rate loans. All floating rate loans have zero prepayment charges. So when you take a longer tenure loans, your EMIs are lower, but you retain complete flexibility to pay that off as and when you have surplus funds. The surplus funds can be, as you mentioned, because your salary increased, or it could be because you have a bonus, or just some other sum of money that you have. Every time you have that,
Right.
you can go and prepay the loan.
Right. So, Vinod, essentially you have taken that first step by at least getting aware about, your home loan tenure and raising that question. Now that you know what it is about, it's probably time that you become more proactive in managing that home loan, and you'll probably be able to, pay it off faster and pay it off more efficiently. Let's move on. Ranjan has called, and Ranjan, tell us what's your question.
Yes, sir. Good evening. My name is Ranjan Tiwari, calling from Patna.
Yes, Ranjan, tell us your question.
Yes, I had taken a loan from LIC Housing Finance at the rate of 10.60, and it was a floating rate. But at that time they said that as and when the rate will be reduced, we will reduce the rate. But now when the current rate is 9.6, they are also giving at the rate of 9.6. And when I approach them, they are saying that no, it is, since your rate is already lower, so we cannot reduce this from that. So what are the options that is available with me?
They just told you that your rate is already lower.
Yeah, but it is 10.65.
Okay. So, Harsh, what do you say to this? I mean, this is a common complaint that most of your, existing home loan customers have this, and which is the reason why the RBI actually brought in the base rate formula, the base rate calculation earlier, because the older customers were getting a raw deal, and though they were on the floating rate, the interest rates would go up with a hike in the repo rate, but the drop in the repo rates were not really passed on. What can he do now?
So Ranjan, I think welcome, as they say, to the world of home loan lending. Okay, I mean, clearly floating rate loans in the home loan industry means that rates can float upwards when general interest rates rise. They're very sticky when general interest rates drop. I mean, this is not me saying this. These are official committees of the RBI, including in the credit policy decisions, credit policy statements of the governor in the past as well. What can you do? So first, the Kavita, you mentioned about the base rate formula. Even that is not a perfect guarantee for getting the benefit. Secondly, Ranjan, you've taken a loan from a housing finance company which is governed by National Housing Bank, not by the RBI, and the base rate formula does not apply to housing finance companies. What can you do? It's very simple. Become proactive. You already sound like a proactive customer. Don't take these things lying down. Threaten to switch. You tell them that you want to switch, and a magic word is switching. If you have maintained your repayment track record, like magic, they will come back and say that, okay, please pay us 0.27 or 0.28% of the loan, and we will reduce the rate for you. Or if they don't give it to you, please shift. There is no earthly reason for you not to shift, and they cannot demand a prepayment charge. The new lender will also probably be most happy to give you the loan without charging you any processing fee. So there's nothing stopping you from getting the new rates except doing a little bit of effort to get that.
Right, and Ranjan, also ensure that you're not paying any prepayment penalty or any penalty for switching the loan, because that also, as per both RBI and NHB rules, the housing finance company cannot charge you a penalty for switching your loan. So ensure that you don't have to pay that amount when you're moving, but however, you will have to pay the processing fees at the bank or the housing finance company where you're shifting the loan to. So you need to take that into account. Also, very quickly, Harsh, before we move on, since you've told him that he should look at shifting as an option, what is the ideal time to shift the loan? In the earlier part of the loan tenure or later? I mean, the first 5 to 10 years, when should you actually ideally shift a loan?
This is a very often asked question. It does not matter. As long as the interest rate drop that you are getting is enough, you should shift.
What is enough?
I would say
Is it
0.5%.
Okay.
I would say 0.5% is enough. The other thing is materiality. If the loan amount left, not the period, if the loan amount left is say 2, 3, 5 lakhs, then the sheer effort of shifting may not
It's
really
pointless.
be worth
So if you, Ranjan, if you have a significant loan amount left and if you're getting at least half a percentage point difference in, in the interest rates, then it probably makes sense for you to shift. But like Harsh said, first threaten the housing finance company. Chances are they will give you a good deal. Let's move on. Dave has called in. Dave, tell us what's your question.
My question is, I have two properties, right? One in my wife and my name jointly held, and second in my name.
Okay.
And both of the properties are financed by loan, right? Now, the property which is jointly owned, the loan amount is 60 lakhs, and which is in my name, the loan amount is 30 lakhs. For the jointly held property, I have repaid 30 lakhs from my own account, I mean my account. And EMI of that joint loan is being paid through my wife's account, right?
Okay.
For the loan which is only in my name, for the house which is only in my name, the loan is being reimbursed from my account. So what I want is that I want to simplify the tax exemption which we can avail. So what I want to do in nutshell is that the house which is in my name, I take the tax exemption fully, and the house which is jointly owned, my wife should take the tax exemption fully. So just to simplify, my aspiration is that I can take the entire exemption for the loan which is in my name.
Right. So essentially, you just want to split the tax exemption on both the home loans. You want one exemption to go to your wife and one to yourself, right?
Yes.
Okay.
Yes.
So I think he just has to establish a paper trail of the money from which account it's going, right, Harsh?
That's right. Dev, if I understand it rightly, the house that is jointly owned cost you 80 lakhs. You paid the down payment of 30 lakhs and the entire 50 lakh loan is being paid by your wife from her own sources. Is that a correct understanding?
See, what happened, I'll tell you. Yes, you can assume that. I mean, 20, 30 lakhs is something I paid from my account.
Right.
The down payment is done through my account, right?
Yes.
And the remaining loan which is being financed, the EMI is going from my wife's account.
Right.
But it is jointly held, and it is declared as investment. So all the interest would be deductible, right? And I want all the interest that is on 50 lakhs to be taken into my wife's account, wife's calculation.
Right.
Yes.
Right. So I think clearly the entire loan belongs to her, which means you have split that house as 3/8 for yourself and 5/8 for your wife, and her 5/8 portion she has bought in by way of a loan which she is repaying. Very clearly, she will be able to get the full deduction for the interest that she is paying if the house property is rented out. If it is self-occupied, then obviously the deduction will be limited to 2 lakhs in her name.
So what I understand is, even though I paid 30 lakhs of the 80 lakhs, which was the cost of the property, the 50 lakh, that won't matter. I mean, that won't matter to tell that I have to claim half the portion or 30%.
Dev, I think what Harsh is trying to tell you here is what is more important is where the EMI is being paid from, which account is the EMI money going from. So if that is your wife's account, then she can claim complete exemption on that. That is if the property is rented out. If it is not rented out, if you all are living in that house, then there is a cap to how much you can claim, how much tax exemption you can claim. So what is important over here is not the down payment. What is important is which bank account that EMI is going from, right?
One last question, Mr.
Quickly, Dev, we've got a lot of callers waiting.
So there is no legal agreement to be entered between me and my wife.
I think that's an excellent question, Dev. If you go on our website, you will find a standard sharing agreement. I would suggest that you can enter into it on a plain piece of paper, laying down how you have financed it, and I think that should help you in case any query comes up when the income tax assessment takes place.
Right. Thank you very much. Thanks for calling in, Dev. Let's move on. We have a query coming in now on our website, www.mbnow.in. Manoj Malkani writes in, he says that he is planning to buy a resale house in a Mahada society in Malad West near Marve Road. The area of this flat is 300 to 350 square feet. Will he get home loan on this property which costs over 30 lakh rupees? If yes, how much is the tenure? It's a resale MADA flat, but it's a MADA flat. Why shouldn't he get a home loan for that?
So I think two issues that he mentioned. One, I think, is the area of 300-350 square feet. Typically, a lot of lenders have a minimum area requirement, and that I think the minimum area requirement stems from the fact that the smaller area flats don't have proper legal title in lot of cases.
Yes, but this is a MADA flat.
So yes, so probably in this case they might be willing to fund it. So definitely you should get funding. The other issue that happens with MADA property is the fact that typically they are older, and if they are going in redevelopment, he will have a problem in getting a loan for that. The tenure of the loan will depend on his age and his income.
Harsh, MADA flats also come with a lock-in. So since MADA sells it on a lottery, I understand there is a lock-in of around say 5 years or 3 years within which owners are not allowed to sell those flats. Now we also know, and it's common knowledge, that there is a big grey market in these flats where people who've got the lottery sell it. They do sell it, but this is not something that is done legally. Is that also the reason why he's probably finding it difficult to get a home loan, because it is a resale MADA flat that he's buying?
So it is not true of all MADA properties that there is a lock-in period. So obviously, if there is a lock-in period, it's not lendable. I mean, because it's not sellable, there is no question of any loan on it. In case of a MADA property, anyway, he has to get an NOC from MADA. But that is available. There is a standard process for getting the NOC from MADA. So let me just summarize. If the property is not too old, that is, it's not going into redevelopment, he is able to get an NOC from MADA and his income is sufficient, there is no earthly reason why he can't get a loan against that.
No earthly reason why you can't get a loan, but if you do get stuck, come back to us and we'll try and solve that for you. Vivek has called in. Vivek, tell us what's your question.
Yeah, my question to our esteemed panelist is that I'm intending to purchase one flat in Virar, Mumbai, and I'm looking for a housing loan. So I want to, but it is a pure investment purpose, and I will sell it after after the building will be ready. That is after 3 years. So I want to ask whether I should start my EMI or continue with only with pre-interest. What would be beneficial for me, because it is a pure investment purpose.
Okay, that's a very interesting question there, Vivek, and it also gives me the opportunity to ask you, Harsh, can you break down what is pre-EMI for our viewers, because there are a lot of questions that we get about this, and obviously there's a lot of confusion out there about pre-EMIs.
Good. Okay, so Vivek, you are buying a under construction property. Probably the loan will be disbursed in stages, may not be disbursed one stroke. Typically, what most lenders do is that during the period when the property is still under construction, on every disbursement that they make, every month, you pay just interest at whatever interest rate has been contracted. And that is called an interest paid before your EMI starts, hence the terminology pre-EMI. Once all disbursements have been made, they are all consolidated and your EMI starts thereafter. So I think the pre-EMI is typically during only the construction period before all disbursements have started. But you always have an option, you can always ask the bank to start off the EMI. There is only one thing that I would like to clearly clarify. Whether you pay the interest as a part of pre-EMI, which is pure interest, or whether it is the interest portion of an EMI that you have chosen to start during construction period, tax incentives or tax breaks on the interest amount or on the principal repayment account is not available during any year under which it is under construction. So from that perspective, it makes absolutely no difference. The only thing is, if you start off the EMI, obviously your repayment starts faster. So if your budget can take it,
but
start off the EMI.
Tell us this. Now we also hear that in that initial period when you are paying the pre-EMI, tell me this. are you also repaying your principal?
You're not.
Or is it's just interest that's
it's
going,
pure
right?
interest.
It's pure interest.
Absolutely.
So does it really make sense for the customer then to go for a pre-EMI?
So as I said, it depends.
What is
it
the cost benefit?
So the cost benefit is this. I mean, clearly, if you have bought a property, in his case, I think Vivek has bought it for investment. So which means he probably can afford to pay the full EMI.
Right.
There are people who bought under construction who are staying on rent. So for them to be able to start off by paying the EMI may be pretty tough. So if you want to pay back your loan quickly, you might start off EMI on every disbursement. If you can afford to do it.
So Vivek, if you want to pay off your home loan quickly, then start the pre-EMI, or then opt for the pre-EMI, but you will not get a tax break until you get possession of that property. Let's move on. We have another phoner query coming in. Raj has called in. Raj, tell us what's your question.
Hello.
Yes, Raj, tell us what's your question.
So I'm calling from Mumbai. Hello.
Yeah, tell us. We can hear you.
Yeah. So I have already bought a house, and it's I've taken loan from Punjab National Bank. So the processing fee they have charged me.
Yes, Raj.
Yeah, and later on they are also charging the franking amount from me.
Okay.
So I want to know that I have already. The registration is already done. So later, that person told me that you just have to pay the processing fee, right? And now, the managers and all, they are telling me like you will have to pay the franking amount. So now I want to know what is the franking amount? Why do I have to pay? And why can't this amount is paid by builder? And is it important? Is it compulsory? How is it? I want to know that.
Franking amount, I think, is like stamp duty. Harsh, what do you say?
So Raj, I can understand your query. So I think we must understand what is this franking amount that you are paying. When you take a loan, you are handing over the property title deeds to the bank. And this in Maharashtra, this is required to be recorded on a statement. And this statement has to be franked. This is only between you and the bank. It has got nothing to do with the builder. This liability clearly is yours. It is in Maharashtra, it is at 0.2% of the loan amount. So there is nothing wrong with it. You will get a copy of the statement that records the handing over of title deeds, on which you will clearly see this 0.2% having been franked on the statement. The bank is not pulling a fast one on you. Please do pay this 0.2%.
In fact, Raj, it will actually strengthen your case. This is another paper or another piece of paper that cements your ownership over the property in a way. Right, Harsh?
It does not cement his ownership, but please remember, there have been cases where the banks have lost title deeds. If you have this proper handing over document that's been duly stamped, the bank cannot claim eventually 10 years later, 15 years later, that you never handed over the title deeds to them.
So, yeah, so essentially it's a safeguard for you as well, so which is why you should probably just pay that franking duty and get it done with, right? With that, we are completely out of time on today's show, Property Hotline. But tomorrow we'll be back with another guest and we'll answer queries related to buying, selling and investing in property. Harsh Roongta, thank you very much for joining us and hope to see more of you in future. You know how to reach out to us. You can write into us on our website, on email, on Facebook. You can also send in video queries like I told you earlier on feedback@mbnow.in. You can tweet to me. I'd love to hear from you. And also, you could call in live like all the other callers you saw on the show tonight. So keep those questions coming in. Keep watching Property Hotline. Thank you very much for tuning in. Keep watching Magicbricks Now.